Hello, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and let's break down today's the market price action. It's a Tuesday, September the 10th. Let's get into it. As always, we'll be taking a look at markets, looking at broader market analysis, then take a look at currency baskets, and then we'll talk about possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we jump into the market analysis, let's jump right into the numbers and the headlines for the day. So you can see that the markets are in a recovery mode. So last Friday was really a big down day. Last week was a big down week. So what we are seeing is a relief rally. And we are almost in the couple of days, Monday and Tuesday, we have recovered most of the Friday's losses. Remember the losses that came after the jobs report. Now, if we go outside of the equity markets, I'm not really seeing the same recovery. Well, if you look at the bond yields, they remain under pressure. They actually hit new lows today. If you take a look at the dollar is mixed. It's not really going higher or lower. If you take a look at the numbers, and this is where, if you get into the numbers, nothing really has changed. Though yen was the strongest currency last week, and followed by Swiss franc, well, it continues to be the case. European currencies not really doing much. That remains the same case. Aussie and Kiwi slightly higher and lower. Again, not moving much. The only thing that's moved down today is the CAD. And that's, again, looking at CAD yesterday, it had put an equal amount of gain. So yesterday was the best velocity currency and today is the worst velocity currency CAD. Now, if you take a look at outside of that, dollar's not really falling apart. Dollar's not really rising crazy either. I think nothing has really shifted the tide in the currency market. But if you look at the equity markets, we can definitely see the tide sort of shifted there. Now, this is where things sort of get murky because, you're trying to follow correlation, you're trying to follow broader markets, but this is where when things are not catching up, I think is a good time to take a pause and see, okay, well, what's the next big move here? Now, if you take a look at the equity markets, you can see S&P up, for the World Stock Index slightly up, crypto is slightly up, gold is up, and then oil continues to get hammered. And this is, again, a good example of something that's just in a free fall, and it just continues to fall. Now, if you look at the crypto markets, you can see that relief rally in cryptos. Bitcoin Cash, Ethereum, Litecoin. So it looks like the crypto markets are following what the broader markets are doing. Now, a bit of a disconnect in the currency market. Now, if you take a look at where we are in outlook, well, we were sitting at negative -2, but here we are. We're below the 20-day moving average, but we are right at that 50-day moving average. So, getting a -1 score, this is something, again, I talked about how we have recovered most of the losses from Friday. At this point, could the market rally higher? Well, we still have all-time highs, or the highs over here that it's unlikely is going to break here. I think at this point, maybe if it gets above this moving average, you can get above this 20-day moving average, maybe get down towards this prior support, now the resistance. But again, looking at where we were on Friday and where we are right now, the markets looks a little bit better. Now, if you take a look at our numbers here, or the economic reports, this week is a lighter week, but we still have important events to go through. We already had the employment report out of UK, not a big mover, still stay the same. Now, if you take a look at tonight, we have the GDP. I don't really see the pound moving as much on these numbers. But again, I think the next big focus is going to be tomorrow with the CPI. And this is where, is the CPI still as relevant? Or is that focus shifted to the employment report? Remember, the employment report are pretty important right now. And last two reports had massive moves. So this one, again, they're not looking for any change, looking as expected. And they're looking for a drop in that year-over-year number to 2.5 versus 2.9. Now, this is where, if we take a look at the bond markets, and I think that's really where we are seeing that disconnect, they're expecting this number to be a lot cooler. I think they're expecting this number to fall below that 2% range. And that's why the bond markets are sort of getting ahead of that trade and showing more weakness. So we'll see what this number comes out. I don't really see a whole lot of change happening in the core. If you look at the oil prices, has come down quite significantly. But again, I think the big focus is going to be on this year-over-year number. See if this comes out at 2.5, or does it come higher or even lower. I think based on that, we'll probably see more movements in the market. But I think if you look at the next week, when we have the FOMC rate decision, they're looking to cut rates next week. So I think that's where we'll start to see things sort of get more active. But this week, we'll take a look at CPI, and on Thursday, we'll take a look at PPI. But this is a good week where you want to take it slow because you want to keep all the ammo for next week. The other important event this week is the Euro ECB rate statement. You can see that they're looking for a bigger cut. It's not a 25 basis point cut. This is a bigger cut. So we'll see. Again, we'll already have CPI out of the way, but this is going to be interesting. Do they cut that much? And if so, what's priced in the euro? I think the euro is sort of hanging in there. I mean, nothing is really moving ahead of that statement, but we'll find out how this turned out and what's the reaction in the euro. But these are the only important events in this week. Now, let's do our currency analysis and just take a look at the velocity scores, and then we'll take a look at the charts. Now, if you look at the velocity scores, this is where we are at. There's a lot more, as far as the velocity score goes. Not only we are seeing the dollar really mix, everything is sort of mixed here. Again, we are seeing the Aussie -2, and if you look at it from a risk-on rally that we seen in the markets, this should have been, higher or moved to maybe +1 or +2, but that's not the case. Aussie showing relative weakness. Here we are, CAD falling back. It was stronger yesterday, and then now it's weaker today. Pound is showing a little weakness. Euro is showing a little weakness. You can see that this is not a straight cookie cutter, board. There's a lot more, mixed sort of a reaction or performance here. The thing that's really outperforming is the yen. After that, you can see that the Swiss franc in the dollar, they're kind of holding in there. But again, dollar trade ahead of all what's going on in the CPI and the Fed rate cut, dollars are really moving as much as you would say. I think it's the yen crosses that's really moving the most. So if you really compare yen to the Aussie, CAD, pound, euro, that's really where the big movements were. Outside of that, if you're trying to figure out what the euro kiwi is going or Aussie kiwi, that's really not where the big trade is. So we want to still keep our slate clear and then kind of continue looking at that relative strength of weakness, and also look at broader markets too, because maybe this is a delayed price action, but we could see things improve if the market continues to improve. That most importantly, the Aussie or even the Kiwi improves a little bit on the score. So let's just jump into a possible trades ahead, and let's look at some setup.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So looking at our possible setups ahead, let's just take a look at some of the currency baskets. So I want to talk about where the yen is. You can see the yen is right at that resistance or getting towards it. 4-hour chart, you can see that this thing is just not backing off. And now the dollar is the one that I know traders getting a little bit confused with, because, take a look at dollar. Dollar was looking pretty weak, and then we had a bit of a recovery, and it's just in a holding pattern. Now, it depends what you compare dollar to, because if you take a look at dollar against the yen, you get a whole different picture. It looks like with the dollar yen, it's just sitting at a key critical support at 142.10, down to 140, 185. This is an important level of support. Here we are going back to it. This is where we are. So we're just kind of hovering here. But if you look at this one, dollar looks way weaker compared to the Japanese yen. But now, if you take a look at Aussie against the dollar, what do you see? Aussie Aussie looks pretty weak against the dollar too. So that again telling me that, hey, I think it's the Aussie yen that's the weakest. So this is why it's important to take a look at relative strength of weakness, because it really guides you to a better pairings. That's really what's moving here. Outside of that, you can see their dollar is performing well against certain currencies and is doing worse against certain currencies, which has been the sort of a theme for the last month. So going to tomorrow, what are we looking at? So let's just take a look at let's take a look at the bond yields. This is what I want to show everybody here. You can see that this thing, how weak it is. The last few days has been terrible as far as this goes. And this kind of closed at the lows of the day. So, which again is telling me that the market is expecting a cooler CPI print. Now let's talk about possible case scenario. What if it comes out stronger or weaker? Well, if it comes out better than expected, we'll see the yield sort of jump back up. And again, that will help the dollar to sort of jump back up as well. This is the daily chart of the dollar, and you can see that it's off the bottom. It is right at this moving average there. So this score, again, it's not really looks like it wanted to roll over yet. At this point, it looks like it wants to break out. So you got to watch out for the dollar here. Don't be married to that dollar weakness here, because, dollar looked a lot weaker here. But dollar right now, kind of holding it steady here. So is the yen the big trade here? Well, you can see that yen does really well when there's a risk-off sentiment in the markets. But here's the interesting part. Today, the markets are okay. Yesterday, markets are okay. And the yen did weaken yesterday, but then here we are being stronger again today. So it's showing that relative strength. And I think market needs to really move out of this consolidation phase and kind of see where it's going to go. But if the equity market stays strong, I think there's a bit of a risk for the yen to maybe weaken for the shorter term. So that's the only thing that I'll be watching out for. You can see that we are right up against that resistance. We got the moving averages here. Things are again looking good for the yen. But at the same time, if I look at the correlation, they're kind of sending me mixed signals over here. But for now, again, nothing is pointing out to a weaker yen. This is where you get to stay on the sideline if you're not really getting the right price action or getting a nice little move. I think probably we got to wait until tomorrow. You can see that CAD, had a rally yesterday and then fallen right back lower. Nothing is really, pointing out to me as a great buy or sell. I mean, only thing I can look at is yen. All the yen crosses probably look the same, and you can take a look at it on an hourly chart. We got a nice little bear rally right at the support. So the only thing, as far as the charting goes, looks good is in the yen crosses. Now the question is, should I jump on the yen here? Am I too late to it? Or if the market sort of bounces higher, then could the yen reverse? I think anything can happen here. The best case scenario is that markets are falling and yen is strengthening. So that's the best case scenario. If the markets are also gaining and the yen is also gaining, I think that's where we're getting a little bit of a mixed picture here. So outside of that, again, if I just stick with the technicals, Aussie dollar is making a nice low base. Kiwi dollar, it's a 4-hour chart making a base here. And most importantly, take a look at the euro. I want to highlight some of the euro crosses here because euro has officially broken the support and it's moving lower. Remember, on Thursday, we have ECB to cut rates as well. So I definitely is noticing more weakness in the euro. And this is where, you get to pair based on relative to weakness. Euro pound is not really diverging as much. Could the euro looking be better against anything else? You can see that 4-hour chart. We're just giving up these areas against the euro. Aussie looks slightly weaker, but again, it's not a wow setup. If you take a look at the euro CAD, it's kind of stuck in that range. Now, if you take a look at the euro Kiwi, again, very similar to euro Aussie as well. So again, not really finding great setups. I think this is a great time to just kind of sit on the sideline and not really get caught up in these moves, because if the yen bounces reverses higher tomorrow, or the yen crosses versus higher, let's say whatever happens with the CPI, I think there's going to be a big move off of that news. But you want to kind of stay cash going into the news, because a lot of the negativity is already kind of priced into the markets. But again, if there's sort of a recovery, then we want to act on it if there's sort of a reversal happening in the markets. So in conclusion, again, US CPI report, that will be in focus tomorrow. So that's coming out due at 8:30 a.m. Eastern Standard Time. Euro, I think likely to remain under pressure. I think that's good because of the rate cut. But outside of that, focus on relative zone weakness. We had a great movement in the last 2-3 weeks, and sometimes after that we get this sideways movement, this range bound movement. That's really what we're getting here. So I think we're going to watch out for this and look for the next period for that big breakout one way or the other. Thanks for joining. See you in the next update. Cheers.